please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of Midcap Radar. The market is up 36 odd points, 10,453. It's been quiet for the last couple of odd hours or so. But I must say it's gotten a little better, at least on the indices from where we were trading even an hour and a half, 2 hours back. 0.5% nearly gains coming through. The Bank Nifty is also recovered. It's up 0.4%. The Midcap index remains flat. It's been flat since the morning. Advanced decline is more on an even keel. I mean, so 1,100 stocks lower and about 950 stocks which are higher on the NSE. Rima, afternoon.
Hi, afternoon. But all those 0.5% gains in the Nifty and the Sensex have come through just in the last 30 minutes or so. So there has been an afternoon pickup. Oil marketing companies have trimmed some of their earlier losses, still in the red. So still down about 1.5% on IOC or 2.5% gone on BPCL. But from the lows, there has been a recovery. That apart, you've got Infosys, which is looking quite smart ahead of numbers tomorrow. So that's gained close to about 3.5%. A couple of private banks like Axis Bank, Yes Bank, HDFC Bank too.
We'll get to some of those in some detail in a bit, but Ashwani is with us as always on the top of the show. Ashwani, thanks very much. There is some pickup definitely. Would you take this as a sign of confidence, go long, do anything at all here?
See, what it's done is that we've gone past 10,440, 450, which was a resistance. So you can call it a breakout out of a 2-day consolidation. Also, what's interesting is, particularly on the Bank Nifty, that ICICI Bank and Axis Bank have restarted their rallies. And these are two strong legs for the Bank Nifty. Already IT is strong. So that could mean that we have a very strong finish. So that way, if you haven't still entered, maybe you could enter half a position, because a lot of the rally is now done. And early morning, when you got that 100-point odd gap down on the Bank Nifty, that was a good time to buy. But still, for whatever it's worth, you can enter these positions. Individual stocks, TCS is a buy with a stop of 3,100, target of 3,250. ICICI Bank is a buy with a stop of 283, target of 298. And Axis Bank is a buy with a stop of 538, target of 560.
Okay, the Nifty's crossed its 50 as well as 100-day moving average with the up move that we've seen in the last 30 minutes. Ashwani, midcaps are lagging behind. Do you expect a catch-up perhaps in tomorrow's trade? Would you position yourself on the long side in any midcaps?
Midcaps, I think, the same consumption plays is where you can buy. Maybe midcap IT, because IT has done a fresh breakout, and a strong breakout like this, chances are IT index will make new highs. So all of these guys, NIT Tech, Tata Elxsi, maybe Sonata, Hexaware, KPIT, etc. All these guys now have completed their correction and could get to new highs.
Ashwani, we have that move coming back again on Indigo. Any thoughts? It sold off a little bit. Actually, it got to about 1420, 1430 yesterday. Back at close to 1500 today.
See, I take a lot of information in terms of how a stock reacts to perceived bad news. And the way it reacted to higher crude prices, that just shows you that it's now more of a consumption play than a crude related play. And that way, I think next target here could be 1600, 1650.
Okay, thank you very much for that. Let's talk about consumption in greater detail. Titan is a stock which has hit fresh 52-week highs. And it's not just that FY19 will be a good year for Titan with estimates of 15 to 20% growth, but the formalization of the economy post demonetization and GST will mean robust sectoral growth in the coming years. That's the word from Bhaskar Bhatt, the MD of Titan. In an exclusive chat with CNBC's Nithya Balakrishnan, he adds that Titan will aim at doubling the market share under Tanish to 10% by 2023.
We look forward to a very good year and several good years ahead. Primarily because of the formalization of the economy, post GST, post demonetization, and so on. The impact has been extremely good thanks to that in the jewelry business, because it's a very large business where we have low market share. But we've seen that in watches and eyewear as well. We are seeing growth in basically consumer sentiment is also turning positive. It's been positive for a while from Diwali onward. And we expect to grow at a rate much like last year that we grew across our businesses.
15 to 20% kind of.
It should be possible, yes.
All right. If I can talk to you about investment into retail stores and retail expansion, do you have any plan or roadmap, say, for the next 2 years? What kind of annual investment into retail expansion do you see, and a number of stores?
You see, our model is one of franchising plus company stores.
Sure.
So we typically open 100 to 150 stores in a year, but they are not all company stores.
Absolutely.
This is a company store. So you should look at the number rather than the investment. Now, per store, the interiors vary from 1,500 rupees a square foot to 5,000 rupees a square foot.
Sure.
So the company budget may be very low, could be 40, 50 crores. The total investment may be 100 crores. But the point is to locate, to find locations where you can open stores across formats. So it will be an aggressive expansion for the next year, for the current year.
Would you look at more mergers, more acquisitions in this front? Because you did mention Carrot Lane. You also recently invested into, a smartwatch technology company.
We are exploring possibilities of capability building.
Sure.
So where we can do it internally, we would. Like we started a digital function in the company all of our own. But some where we feel we can grow faster by investing, we've done that. Like you notice the investment we made in a technology company for smartwatches. So that effort will continue, much like Carrot Lane, and wherever we see opportunity for capability building, we will do it.
All right. One quick question before I move on to market share for the categories. One of the recent launches was under the band of Fast Track Reflex, which is a more affordable Fitbit or Garmin or exercise watch for India's youth. How well is that brand performing, and what is the outlook on the same?
It's done exceptionally well. First of all, Fast Track itself has done extremely well, and that's also because of the youths in India are aspiring for brands and so on, and the Fast Track attitude is what they're buying into. But particularly Reflex has done extremely well because it's great value for money.
Sure.
And coming from the House of Titan with the Fast Track branding, it's that value multiplies compared to a lot of foreign brands that are available. So it's broken all records in terms of our own expectations and growing fast.
Well, Mr. Bhatt, now talking about market share. Talk to us about the revenue breakup really across segments. What does jewelry contribute versus watches and eyewear? And what is the kind of market share you enjoy currently and you expect in the years going ahead?
The company's revenue is roughly split 75+% in jewelry, roughly 20+% in watches, and the balance is in the other businesses. However, the market shares are very different. Watches enjoys a very high market share, 40% plus.
Interesting.
Jewelry is about 5%, eyewear is about 10%. So the scope for growing market share in jewelry and eyewear is very high. Scope for growing market share in watches is low. Therefore, our effort is to increase the size of the market in watches, and that's why these stores and new products and Fast Track Reflex and technology, smartwatches and so on. On the other hand, jewelry, 10% share is desirable, and we are aiming for that in about 5 years from now. Similarly, I plus 10% is where we are today, but we should be growing to at least 2 times that in a growing market.
One sector which has looked good and which should look good because of the hot political election season this year and the next is going to be the consumption sector. When I say consumption, I mean both ends of the spectrum, both the staples the FMCG companies on the other end, discretionary as well. But what is consumption looking like in India, both urban and rural right now? We've got somebody who's tracked that and answered that question for decades now. Rama Bijapurkar is one of the most well-known consumer market strategists. She's worked with companies on their strategies. Ma'am, thanks very much for your time. Appreciate you joining in on the show. So I start with a simple question, what are consumption trends looking like, both in rural and urban India? And are you seeing a discernible pickup?
We can heave a sigh of relief, temporarily at least, because we have elections coming up. And that means a lot of money getting pumped into the system. The 2014 elections, apparently 30,000 crores got spent. This is going to be, I think, more money spending. To just look at it in terms of perspective, the entire Narega spend was about like 52,000 crores last year. So you're looking at an injection, and therefore you will see some heightened economic activity. So I think we can heave a temporary sigh of relief. But if you look at the fundamentals, consumer India is not feeling so good right now. In terms of sentiment, all the consumer confidence studies are showing that it isn't bad days, but it certainly isn't good days either. The long term, of course, is positive, but in the next 1 year, people aren't feeling as positive as they did, let's say, a year ago. So it is, din bure nahi hai, ज़्यादा अच्छे होंगे, but right now the consumer is saying it's sort of middling. So I think we have a consumer sentiment issue to deal with. The other thing also is that I think consumption isn't something that you can pull out of a hat. It's not like a rabbit that comes out of a hat. You have to have income in order to consume. And if you need to have income, then you obviously need to have vibrant economic activity. So if you look at the last many quarters, and in fact many years, you're actually seeing that consumption growth has been higher than investment growth. Now, consumers will continue to consume even if their incomes at a faster rate than the rate at which their incomes grow, as long as they believe that income growth is around the corner. And we just discussed the sentiment issue as well. So I think it is we need to see income growth in order to see far greater consumption. Consumption growths have been in the mid-single digits, and for a country like ours, for all the hype and hope we have of what consumption will deliver for us, I think that is, we've seen at least double that amount of growth on a consistent period, even in the 2000s.
I mean, you began your answer by saying that we can heave a sigh of relief because we've got elections and lots of money gets pushed into the system. Do you believe that will, I mean, election-related spending will really boost rural demand growth?
So as I said, elections will give us a temporary sigh of relief. But if you look at the nature of rural occupation and where do people earn from, so about 16-17% of households are basically entirely agriculture, about 40% are entirely non-agriculture, and the rest are mixed. So by and large, the major occupation is either you're a poor and small farmer, or you are labor, which is mostly construction labor, fungible construction labor, agricultural labor. So unless you actually start having sustained investments where this labor can be deployed in the shorter term, we're not actually going to see the fundamental health improve. If you're asking me, can we actually boost it a little bit? I mean, rural India, and that's the thing with India, right? The numbers are so large that even if everybody consumes a little bit more on a percentage basis, you will get your growth. But basically, we need to have work for people so that incomes can grow. And right now, not only isn't there work, we're also seeing a lot of price increases even in urban India. So the answer to your question is that in the shorter term, you can tinker it, but in the longer term, the fundamentals will improve when the fundamentals improve.
Okay. That point is made. Ma'am, rural growth used to be about 1.5 times or 2 times that of urban demand. Are we anywhere near that kind of growth in the rural markets?
I find actually I have a more fundamental problem with this rural and urban. It is true that most of a large chunk of India's poor live in rural areas. It is true that about half of India's rich actually do live in rural areas as well. And also, if you look at the whole rural-urban continuum, as we're seeing in several categories, I think that what's good for urban is good for rural as well. The idea of, yes, there are a lot more people dependent on labor, so unless you actually improve it, how is it going to come back? It can come back if you improve infrastructure, because all models have shown that a little bit of increase in infrastructure causes more consumption than a equivalent increase in income at this point in time. But I think fundamentally you need to actually improve economic activity and improve investment for things to happen.
Post the GST disruption, are things back to normal now?
In fact, let me look back and say, yes, the wholesale channel did get hit. It is also true that if you look at very small manufacturers who feed, let's say, the local manufacturing that feeds both rural as well as small town urban, I think the transition that we're making from black to white is a painful transition, and that painful transition does actually increase prices to the customer. So I think both in urban as well as rural, we're seeing that if it is harder and harder to do things in cash, and you're going to have to pay the taxes that you're going to have to pay, then prices across the board are going up. The wholesale channel, firstly, I think we should be, companies, FMCG companies in particular, should be relying less and less on the wholesale channel. If you have been an absentee landlord with the customer and done a lot of business through the wholesale channel, then I think that going forward it is going to be hard, and direct distribution is what you need.
I mean, the markets come off a little bit from the highs, but still going okay. 10,457 is where we are. We're discussing consumption trends, and Rama Bijapurkar is with us. I mean, before we took that break, she told us that there is a consumer sentiment problem in the country. Okay, let's get some specific insights now. In terms of product categories, naturals had been emerging as a big theme, have been emerging rather in many categories. I mean, it is now a pretty significant percentage of the total in that category. Ma'am, could you tell us what trends are you seeing in the natural segment across categories?
I'm a bit of a maverick, and I have trouble understanding a trend. I think what we have in the case that you're referring to is somebody who came in with the right price performance point and with the proposition, yes, naturals is an attractive proposition around the world, not just here, right? Who would want chemicals? But often the problem has been that naturals haven't worked as well as the non-naturals, and now you have someone who's saying it is possible. So I certainly do believe that that is a powerful theme if you look at it across the board everywhere. But that does not mean that it's a one-way ticket. I think consumers are pretty smart. They look at benefit and cost, they determine value, and then they make their choices. A rather sleepy FMCG market has perhaps been woken up a little bit as a result of a new entrant coming in with a powerful proposition. If that entrant stops to deliver, then it will obviously reverse. It doesn't mean the trend is away from naturals. It just means that a particular company is not doing as well as it should.
I mean, have the large incumbents now sort of fully risen to the challenge? I mean, as you said, posed by Patanjali?
No, I think they are. I think whenever competition comes in, these are all first-rate companies, and companies do respond. So I don't think anybody is giving it a walkover in any kind of way. But consumers actually have no religion around anything. They only have a religion around what gives me maximum value, mera paisa kaise vasool hoga. So I think companies are coming back. But the more interesting thing is that the amount of innovation that you see on the street, in the pavement markets, in goods that are coming in from China, is the kind of innovation we don't actually see in large companies. Even if you take something like food, for example, if you look at clothing, I think you're really seeing the smaller guys are actually far more active than the bigger so-called brands. So I think that is, if you say, is there a trend? I think that is a theme that is coming through repeatedly as far as India's consumption story is concerned.